Hello, everyone. Happy Sunday. We're back to our weekly webinar, your weekly trading plan. I hope you had a great week, and I hope you're enjoying your weekend. And we all should enjoy. We all should enjoy the weekend and get the energy for the upcoming week. We're going to need a lot of energy. A lot of things will be happening. So I want to welcome you back, of course, the returning visitors, and for the new people, welcome to our webinars. I hope you'll find it useful. And the whole idea of the webinar, it's really clear on the title. It's pretty much creating a structure for the week to get organized, to have a plan, to have specific ideas, and to see how a market develops. So we'll be prepared for some actions. For those of you that don't know me, my name is Simon Friedman. I'm a senior account manager with AvaTrade. I have an experience actually for over 22 years now. June, it's 22 years since I came to trading in New York professionally. For about 11 years, I was a proprietary trader in a couple of New York prop firms. And after that, I started to trade independently also, educating and mentoring other traders. And now I'm working, as I said, as a senior account manager with AvaTrade. And here's the agenda. It's a simple agenda. We're pretty much doing the same thing every week. We go through some indices, some stocks, commodities, and Forex. And you can follow us on the following channels on Telegram, Twitter, and YouTube. And by the way, this webinar is being recorded as most of our webinars. That's why YouTube is an amazing source of information. If you missed the webinar, you can always rewatch it. And a lot of tutorials, educational material is being updated every day. You can subscribe, you can click on that bell and get notified when new things are coming in. And of course, the risk warning. Whatever we do here is for educational purposes, so you can read it whenever you like. You can access the full statement on our website. And let's move on. So as I like to start all the time with the big picture, just to see the general things, what's happening in the market. And as you know, or you might know, or you will know in a moment, that we spoke about last week, that we were expecting the inflation data, because the week before we had NFPs, which were better than expected, and market reacted initially in a negative way, because we are in the time of the Fed's really tightening the monetary policy, increasing interest rate. And why? Because in a simple way, inflation is eating up a lot of things globally. And just to give you the number, I've done some research, and US is actually somewhere in the middle in the inflation numbers, and the global kind of median inflation now, it's 7.9% year over year. And just a year ago, in June of last year, there was 3.05, so more than doubled globally. So not just US, European Union, UK, a lot of parts of the world really, really suffering. And of course, I think the worst one is Turkey. It's really a huge struggle there. I'm not sure what is it today, but last week I think they hit 73% inflation, just insane what's happening, how is it affecting the life of people, and the currency, the local currency, and everything else. So we have inflation. It's on. Even Yellen, Janet Yellen, the former Fed chairman or chair, and now she's a Treasury head of treasuries. She said that inflation is here, and it's not so easy to get rid of it. I don't know what the exactly words she said, but it's here to stay, pretty much. So the inflations, the numbers came worse than expected, 8.66%. Market reacted to it right away. We're going to see the charts in the moment. So we have inflation, global inflation. We have the war still going, and it's actually adding to that inflation as the energy prices are soaring and other things are really, really not getting any better to say the least. And we have on the agenda this week, we have actually the interest rate decision from the Feds, and it was planned that the next 2 or 3 will be 0.5%. And now some analysts, not a lot, but some analysts, since the inflation numbers on Friday, they said that there's a big chance that 0.75 will kick in next week. So these are the things. Again, war, inflation, the Fed's on the horizon with the interest rate decision. So let's take a look at the economic calendar. And of course, for those of you that are not familiar with that, this is the economic calendar. You can find it, just Google it. A lot of providers do it. We have it on our web trader as well. So here I just take out the high impact one, and you can filter it through the countries and so on. So the high impact ones, those are the ones that I take out. And for those of you that are trading and would like to really improve your trading, this is important. Whether you use fundamental analysis or technical analysis, just in my opinion, again, that's the way I look at it. I like to be aware of what's happening. I'm not necessarily believing in these numbers or trusting them or whatever it is, but I want to know that, for instance, on a certain day and a certain time, the news are coming out. So I don't want to get caught in the trade or be prepared for it or whatever the reason. I want to be aware of certain things that are happening. So I suggest to you to do the same. You can put yourself reminders. You can filter things that are relevant to your trading as far as the part of the world, economy and markets and so on. So let's start here. Tuesday, we have unemployment rate from UK. We have consumer price index from Germany, another inflation number. We have retail sales on Wednesday from China. We have retail sales from US, and we have the Fed interest rate decision, and that is on Wednesday. And then monetary policy and the press conference is actually very, very important. When the numbers, like you could see here, currently it's 1%. They expect 1.5. That means the 0.5% of increase. And I guess we'll see the number when the clock takes their time. And after half an hour after the announcement, we're going to have the press conference when they're going to be drilling Mr. Powell and asking him for the next move and so on and so on. We have GDP numbers from New Zealand the same day. Thursday, unemployment from Australia, interest rate from Switzerland, and we have a bunch of things from UK that's including interest rate decision. And we have, I guess, the press conference as well, the summary and so on. And on Friday, very, very important, we spoke, if you remember last week, pretty much every week we speak about the yen. And here you go, the interest rate decision from Japan is on Friday. So like I said last week, if I remember, I said it, that they need to do something because the yen is really, really suffering, and the strength of the dollar is pushing yen lower. So this is the economic calendar. Now let's move to the trading platform itself, and let's start really trying to make some sense of what is happening in the upcoming week. So let's start with indices. We'll start with indices, and just to give you an idea, I just counted this, that basically the 2 weeks of action to the upside was erased in 2 days to the downside. So it just shows you the market is really, really in a bearish, I don't know, mode you want to say, but definitely in a bearish mood. Take a look, you can count the days: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days we had we had a few days up, and then we had a lot of struggling here. We're trying to hold 12,500 and up and down tails and so on. And then in 2 days, we're just right back where we were with what we closed 11,862 on Nasdaq. So Nasdaq on Friday alone was down more than 3%, I think 3.38% for Nasdaq. S&P was down 2.76%, the Dow Jones down 2.58%. Now, most of the stocks were down tremendous amount of percentage. Even the banks and so on were down. Like for give you the Goldman Sachs, we'll see it in a moment, were down 5.65%. Apple down 3.86%. We have Meta now. By the way, Facebook officially changed the ticker on Nasdaq exchange to Meta, META, from FB, from Facebook. So the Meta was down 4.58%, and so on. Morgan Stanley down 4.6. So stocks were down between 3 and 6, 7%. Okay, so Tesla down 3%, Google down 3%. Even stocks like Pfizer were down 3.5%, Disney down 3.7. Again, I don't mean to bring this negative mood, but this is not new. I've been talking about it every week. It's really a lot of pressure to the market. We are making lower lows and lower highs. So just a matter of time that we're gonna sell off, and we did. And we spoke last week that inflation, if it shows higher, we're gonna have a sell-off, and it is. So again, every week we're expecting something. So now the next expectation is for the Fed's decision. And of course, should they increase it by 0.75, market will really be affected in a negative way. So I guess we'll be seeing it days and hours before the announcement. Of course, the players in the market will be working on it. So again, Nasdaq is down, and it's down back to the beginning of this recent move higher, and the low here was 11,847 and a half. We actually hit that number, but we closed a little bit higher. So that's for Nasdaq. S&P 500, similar story, and US 30, which is Dow Jones, the same story. So again, what's going to be next week? We'll see. First of all, we need to see a few things. We need to see if there's any bounce on Monday when the market opens. But we can get an idea on the closing, and usually the closing shows if we have any hope of moving higher the following day. And we did close on the lows pretty much. So this was the initial move after the announcement. As you could see, we had three hours. I'm taking S&P as a general. The others look the same pretty much. So we have, and it's important that you try to understand dynamics of the market, not just the charts and so on, but really what's happening. So this is the announcement. When they announced the interest rate, we had a huge drop, and then followed by another hour of drop and another hour drop. Then we settled around 30, what was it, around 3,900. We tried to move higher. Some excitement came in. A few hours later, we moved higher. There was a reactive move right here. Some buyers really got excited. Oh, maybe we're going to go back. Maybe this drop is not real. And take a look what happened at the hour before the last. We just went lower, and we closed below this initial 3-hour move to the downside. So the low here with the strong move down finished, the low was 39.0175, and this hour we closed below the 39, 38.98 even. And then of course the last hour, nobody wants to hold over the weekend, but still it's very, very small move higher. So not a lot of excitement to the upside. So we could expect that over the weekend, a lot of public and retail traders and big houses and big players are going to digest what's happening. They're going to try to read out and see what's happening and what are the predictions for the interest rate and so on. And we might see continuation, or we could see initial bounce. But again, judging by this, there was not a lot of excitement at the closing of the market. So let's just take a look at the 5-minute chart. As you could see, the last, this was the closing on the trading session. and nothing much happened. We closed at the lows, and then after the U.S. market closed, the after hours, we had a little bit of a move, but nothing much. So we pretty much closed on the lows, and we could expect continuation. And of course, the announcement or decision on interest rate and press conference will be a leading power, either up or down. Most likely, if you take a combination of employment and rising inflation, we might see continuation and prediction of the Feds for maybe more drastic measures to tame the inflation. So we might see continuation to the downside. And if you see a weekly chart, this is a clear picture here. We are back to this level of support after 2 weeks ago. We had a nice attempt higher, and then right after we moved lower, a little bit lower, maybe 25% of the previous of this week to the upside. And then, of course, after this erasing of that week totally, we might see continuation. We are below 100 moving average on the weekly chart, and we could easily expect continuation to the downside. This time, we really need to have a closure below all these tails in case if we expect continuation to the downside, maybe even retesting the 200 moving average. Now, if you take the levels, this is where we had a strong support on weekly chart. There's a strong, again, forget about the strong word. There's a possibility that we go and retest there. And if we fail to retest this level, we might go and meet the 200 moving average. So pretty much the same thing for all the US indices, the same picture. Now let's take a look. French index, let's go back to daily chart. A huge drop. It started even before 3 straight days down. We had DAX, same thing, going lower. The inflation is kicking in, and if you know, European Central Bank, they said in July they're starting to increase the rates, and they're stopping they call it forgot what they call it, it's like QE in US when they were printing the money, so they're stopping it. And the US did it a while ago. They're already doing the opposite now. So DAX really reacted to it. And FTSE, if you remember last week, I was saying about this level that we're having a third attempt to break through this resistance around 76.20, 76.25. And I said if we close above it, we'll have a chance to go higher. If we close below it, and we might have a chance to resell and take a look 3 strong days to the downside, and we touch the 200 moving average here. So there was a very nice play here, strong resistance. And I think I remember what I said exactly, that the buyers will really get tired if we can't break through and they just turn around and start selling. And of course, the big pressure on the global markets helped. And then we had a huge sell-off pretty much on FTSE. Spanish index, we start talking about it a while ago, also with the gaps down. Nifty 50, the Indian index, down. Nikkei also, after he actually closed about 200 moving average here, and then 2 days down, especially Friday down. And China is really holding here. I think, of course, it was closed. I'm not sure at the announcement, it's probably already closed. So I think Monday will catch up with the global indices going down, or it might surprise us closing higher. As we said, the China is reopening now, back to getting into full capacity, and we might see continuation to the upside, but it might be sucked into the global sell-off as well. It's usually if Friday closes at the lows on US market, that the opening of the next week, Asian market catching up before anything else. So I think we might see the sell-off on China. So this is as far as indices, and let's take a look at individual stocks. Now I'll start with Amazon. If you remember, Amazon had the split 20-1. And I said that they were priced at 122, and normally if the market is positive, the stock would attract the buyers and we would move higher. Actually, pre-market on that day when they opened, pre-market, it was trading higher, I think up to 127, 128, and then with the market, it sold down, and we closed at 109.80, so much lower. We lost more than 10% of the price since the split. Now, Tesla, we spoke about it a while ago that some stocks are also planning to have a split. So Tesla announced they're planning on having a 3-to-1 split. And I think in August we'll know better. They're planning on bring it to the stockholders or shareholders at the meeting. And we'll know if that was approved or will be approved at that point. So Tesla still going through the issue with Twitter. And I read somewhere a funny thing that they said the Musk pretending to wanting to buy Twitter, and Twitter's pretending to wanting to provide the data. So it's kind of funny. They're still in this game. And just to remind you, initial deal was at 44 or 43 billion. And then Musk said that he wants to have proof that not more than 5% of the accounts are fake accounts or bots or whatever that is. And until now, he didn't get that data from Twitter. Now, Twitter shareholders are suing Musk for messing up their with the money, I think, because initially the stock moved on the news to 54. That's the price of a takeover, and then slowly went lower when the deal was under the question, and now it's sitting around 39.40. We'll see what happens. It's still there. Now, like I said, I'm not going to go through the stocks. Most of the stocks sold out big time. Huge gaps. Even the big players like Cisco, like Microsoft, Cisco, all of them. Take a look at Disney. Disney actually below 100, and it's back to the support. You might really have a hard time going higher from here. Google, another one that might announce soon the split also. So most of the stocks are down. Here comes the Facebook, also down to retest the previous support. So we're gonna have, that's why I said let's get some good rest and good energy. We're gonna have a lot of actions in the upcoming week. It's gonna be really, really exciting. So again, just to wrap it up, inflation, upcoming interest rate decision from Feds, global inflation, lots of issues, war, huge pressure on indices, of course, on individual stocks. So equity market is under the pressure to the downside. Now let's move to commodities. We'll start with crude oil. Crude oil is holding around 120, and it went down a little bit on Friday. So, like you know, the main law of the market, it's all about supply and demand. So all this move up, of course, since the war started, it's all supply related. As everybody got scared, the war is going to cut the supply and so on. And then with the market on Friday, why am I saying we had a move down, but not such a strong one? So still more on the supply, a threat of a supply, in my opinion, because if that was not the case, on the falling market of 3%, we would be probably back to at least 114, 115 on crude oil, and even with a sell-off, we didn't really go below 120. So even though demand is really cooling, but one part of demand is getting a little bit stronger there. That's from China, and I mentioned it to you last week. So as long as China is waking up, the economy is back to normal or getting close to that, the demand is there. So again, we are holding 120. We didn't sell off on the falling global markets, and that means that we might continue and go and retest 130 eventually. Because history repeats itself. If for some reason we came there, and if we're not falling, we keep on making higher highs, higher lows, we might slowly climb and retest the highs, and after that, we'll see what happens. Natural gas, a very interesting character. As you could see, makes a lot of chaotic moves up and down, but still to the upside. We were again retesting 9, closed at 875. Very, very strong. The same thing, Russia-Ukraine crisis. Europe struggling, and so on. Heating oil, similar to crude oil, is holding its positions at 435. And if we are holding here, we're not closing below, we might continue to the upside and retest the recent highs as well. So that's as far as energy. Gold, very interesting action on Friday. I was watching it. Initially went down. It was a weak day for gold, but then when the market started crashing, funny because dollar went higher as well. Take a look. US dollar went higher on the news, of course, the interest rate increase and inflation driven interest rate increase will add to the value of the dollar. And the gold initially sold and then we just moved higher. So in my opinion, and again, take a look, speaking of levels, this was on 3rd of June. This is hourly chart, right? We moved higher and we sold out. We came right there. If you take daily chart, we are back to this resistance on gold. So why did it move higher on the strong dollar? Because as you know, most of the time or a lot of time they moved in opposite direction. Strong dollar moving lower the gold. In this case, I think it looks like it's a self-preservation on the risk of we back to our old safe haven principle. When the market sold out, the money came straight to gold, and it's a good sign for gold actually. If the market continues selling, there was a lot of accumulation here. Just to take a look at the chart, daily chart, from these highs from 1993, we slowly sold to 1800. Then we had a move up to this resistance that we proved a few times here, and here. We hit the resistance, we made a higher low, we came right back to resistance. This time it took shorter period of time. Similar picture right here. We hit right there again, 1838, 1840. And then on Friday, we had a huge spike down. Penny came into gold. I guess some sellers felt sorry afterwards when they had got squeezed out of their short positions. And we back and we closed again on the resistance. So it's a very bullish sign for gold. Again, if this safe haven principle continues, the market continues to tank next week, and then that falling might intensify with the interest rate decision if it's more than 0.5%, 0.75. So we might actually see a continuation, and maybe gold will break through the 50 moving average. We are about 200 now, and if we start closing about this level here, the key level, and we start closing above the 50 moving average, it might open space for continuation to the upside. And of course, we might see retesting of 1900, which is going to be around the 100 moving average and might go even higher. So gold is back in action. That's pretty good. Copper, with the market, of course, is sold out. As the equity went down, the copper went down with it. Again, copper is being used in constructions as the economies are strong, construction is booming, more copper is being used. So usually it's very sensitive to what's happening in China, and that it did bounce here on the China excitement, but lately it's been going lower on the global slowdown due to the inflation. So that's as far as metals. Now, soft commodities, we'll take a look really quick. Corn is holding up nicely. Wheat is building up nicely. Like I mentioned to you, I think last week or the week before, we are sitting here on the previous support, and now we touched the support a few times. We broke through it here. We showed the support. We had a nice move higher. We came back to support, and now we're building, not even touching support anymore. So the buyers, it looks like it. Again, it's my humble opinion. And again, this is just for educational purposes. Do not take anything for granted. So it looks like the buyers are coming higher. They're not letting it even touching this 1038 level. And we might see again, there's a big issue with Ukraine not being able to ship the wheat. and the whole world is concerned. Asia, Africa might really suffer if Russians don't unblock Ukraine from being able to send the wheat to the world. So that's fundamental, and we might see in upcoming week really continuation to the upside, and that it might even shoot up like it did here, It could be happening because it's a lot of build up. Where the build up here, we didn't have a break through it to the downside, so there's a big chance of moving higher from here. So that's wheat. Okay, now that's it with commodities, and let's go to Forex world. As I said, dollar has been very, very strong, and I mentioned to you that we are holding this 50 moving average. It was a nice move down. Then we pulled up again and came back to retest the 50 moving average, and then in the last 2 days was a nice move higher. We closed 104.17, and it was a very strong move. So of course we can take a look at the major currency pairs, and you will see that they really suffered. This is euro. Just 2 days ago we had the excitement. We were on the way to 108, and we closed 105.11. British pound, huge move to the downside. 123 from 125.5 in 1 day. New Zealand dollar, super weak, and that's pretty much with all the currency. Let's take a look at ZAR. I mentioned the ZAR, that at some point USD ZAR is going to move higher, and that was a very, very nice move in the past 2 days. That was inevitable. That was just a matter of time when that happens, and this was a very, very good trade to the upside on ZAR. And as I mentioned to you, the USD Turkish lira, with the huge inflation in Turkey, after each accumulation went higher, big accumulation went higher, and we did reach this peak over here. I don't count this tail, but we did touch what was the peak here? 1715, 1714, 75. We actually touched it, and we are holding around that, about 17. Very, very strong. US dollar against Turkey, Turkish lira, and again, the inflation there is terrible. And I spoke with some of my friends in Turkey. Really, businesses are suffering, and even the tourists that go there, they seeking some good deals, but the locals that's selling in the markets, they just place the price tags in dollars because they're just tired of fixing the prices. So it's nothing good there, unfortunately. And that's as far as Forex. Now let's finish with Japanese yen. And it looks like it might kick in the safe haven like gold did. And if you take a look, besides the US dollar, yen's got really strong the past 2 days in the falling market against majors. That's Australian dollar, New Zealand dollar, euro, pound, even Swiss franc. So yen is getting a little stronger here. Of course, it remains weak against the dollar. And take a look where the tail's down. We're closing at the highs. We're still holding that about 134, and the highest close so far, the recent highest close was 134.52. We're about 14 pips lower closing. So again, like I mentioned to you in the economic calendar, this week, the end of the week, we have interest rate decisions from Japan. I hope something changes, and we have a little bit strength coming into Japanese yen. But as of now, if you take a look, it's been very, very, very strong. Okay, we had two attempts here to break through 130, and then the third one, which just came straight through. We confirmed the support at 130, 130.5. It just went straight about 400 pips to the upside. Usually yen is not moving a lot, but it's been super, super weak. So again, we'll be watching what Central Bank of Japan will be doing to really fix this issue. And let's take a quick look at Bitcoin. And Bitcoin, as we said, week after week, has been very sensitive to equity markets. And as markets sold out, we're back below 30,000. We're trading currently at 28.5, and we're back at support, which could be easily broken. Again, let's see what happens. Dollar's getting strong, the equity market is getting killed, and that's not good for Bitcoin. Let's put it all together. So in the past 2 weeks, we had few things that not really good for the market. We had a great unemployment data or employment data. We added more jobs, which normally would be good, but in this situation, it's not good because the Feds are using it to increase the interest rate more to tame the inflation. Then on Friday, we had inflation data, which is higher than expected, just adding more reasons and more pressure to the Feds to increase the interest rate. So that's the big picture. This week, we're actually expecting the Fed's decision. And like I said, that some analysts are expecting 0.75 instead of planned 0.5, and that's a big difference. And of course, the press conference 30 minutes after the announcement will really guide us what's next. So big picture, huge pressure continues on the equity markets. The energy commodities are holding up due to geopolitical situation, Russia, Ukraine, and sanctions and so on. And gold, it looks like it's back to safe haven. And also there's a big chance that Japan will kick in as a safe haven as well, and especially if the Central Bank of Japan will increase the interest rate to increase the value of yen. And I want to wish everyone an amazing week and enjoy the rest of the weekend. And be strong, be positive, be healthy, and we'll be back next week. All the best. Take care.